So you're thinking of buying your first home. Well, you are in the right place because if you're an Oregon first-time homebuyer, you need to know this information that we are about to share with you today. Buying a home is one of the best financial decisions that you can make when it comes to generating wealth. In fact, the Federal Reserve did a study in 2022 and found that the median net worth of homeowners is 40 times higher than the median net worth of renters. And we're gonna help you get on that track. Not only are we gonna tell you how to prepare to buy a home for the first time, but we're also gonna tell you how to buy a home with zero money down. And we're gonna tell you the very important steps to homeownership. Plus a little bonus tip, which is the biggest mistake homeowners make, or home buyers make, I should say. The biggest mistake home buyers make, which is like the mistake that I'm making when I'm trying to talk. But trust me, you do not want to be the one making the mistake of the biggest mistake, which would be...
That'd be a mistake.
A mistake.
Yeah.
Lots of mistakes being made here.
For sure.
So let's go ahead and move on. I'm Brian Simmons. I'm a licensed real estate agent here with eXp Realty in Southern Oregon, and I would love to hear from you. So if there's anything I can do to help you learn, buy, or list real estate in Southern Oregon, please don't hesitate to reach out. You can call or text me directly at 541-954-7758, or of course, drop a comment in the section down below. So now you were probably wondering who this other dude is here standing next to me, just hanging out. So allow me to introduce you to my friend, Ryan Friend, with Nations Lending, one of the best mortgage lenders in Southern Oregon. So go ahead and tell the people a little bit about yourself.
Thanks, Brian. So I'm Ryan Friend. I've been with Nations Lending for a while now. I've been doing origination for about 10 years here in the Valley. I'm just super excited to be helping people, especially first-time home buyers, establish that dream of home ownership. If you have any questions, you can always reach me at my cell phone, which is area code 734-718-7013. Kind of throws people off a little bit because I have that 734 area code.
It doesn't sound like a local number.
No. But I did. I moved away to the East Coast and met my wife and then moved back here. I'm born and raised in Southern Oregon, so I'm very much a familiar person and with the Valley. And so anyway, if there's anything that I can do to be a resource for you, like I said, you can reach for me on my cell phone or you can drop a comment and I'll get to you that way as well.
Perfect. Yeah, and I actually did the same thing because my cell phone shows up as a Eugene number because I got my phone when I was going to school up there. So yeah. I brought Ryan in today because as an Oregon first-time homebuyer, there are really two main things to start with, and those are, number one, find a good realtor to help guide you through the home buying journey, and number two is find a good lender to advise you and to help you get your financial house in order, and that's what Ryan's here for today. So I've done enough talking myself, so I'm going to go ahead and turn it over to Ryan to talk about the financial sides of how to prepare to buy a home for the first time.
All right, you guys, congratulations. We're here, we're purchasing our first house in Oregon, and you guys want to know what we need to do first. So the first thing that I would do if you haven't already talked to a realtor like Brian is to talk to a lender like myself. And when you talk to a lender up front, you're going to be in a position where you already know exactly what you're getting into when you do get to the point where you're going to make that offer.
Right.
A lot of questions that people have: how much money do I need down? What's the credit score requirement? Do I need to be on a job for a certain amount of time? Those are all things that are valid points that you do need to address, and everybody has their own situation. So not one person can say to you, if you have a job for this long and I had a job for this long, then this is the same thing. It's not apples to apples every time.
Yeah, it seems like there's always exceptions. There's always different programs out there. There's always, ways around things. So that's something I would say to you, from my experience, not to jump onto the lending side, but there are, don't ever think like, hey, somebody told me that I'm not ready yet or I'm not qualified yet. Get it from an expert because there are so many different programs out there that you might fit, into this one, but not that one. Maybe conventional is not the right way to go, but maybe FHA or USDA or something is. And you don't know that until you talk to somebody like Ryan and figure all that stuff out.
So, on that point too, there are so many different requirements that can be adjusted for everybody's individual situation. So I've qualified people and closed on houses with people that had no credit scores. I've qualified people with no money down. It really just depends on what leverage we have to give the underwriter to say this makes sense in the program that we're looking for.
Right. So if you were to give like 2 or 3 things that are the top things for how to prepare to buy a home for the first time, are there any couple things that are just like the absolute, like off the top of your head, best things that somebody ought to do?
Totally. Yeah, so the first thing obviously is credit score. There are, like I just said, there are programs where I could qualify you without any minimum credit score requirement. You're going to be held to certain standards that somebody with an 800 credit score would not necessarily have to have. But if that's the situation that we're working in and that's the time frame that we have, because that's one of the first things we really need to establish is how long do we have to make this happen? Are you up against a 30-day eviction note from your landlord? Are you living rent-free and saving money with your family and trying to figure out when you can buy the next house? That timeline is really going to predicate what we can and can't do and how long we have to make this the best position possible.
Yeah, and all the specifics of that scenario are going to be important for you to know as well to be able to get somebody qualified. So that's super helpful.
So, credit score obviously is the biggest thing. Depending on the program, like I said, there are no credit score requirement programs that are out there. Typically, we want to see a credit score of anywhere between 580 and 620. And so a lot of people use Credit Karma or some of those credit monitoring apps, which are great tools. They're free to use. The thing with those that you have to understand is that they use different credit modeling scores. So what you see on Credit Karma necessarily isn't going to be what the lender is going to pull.
Right.
Because we pull directly from the three agencies, Transperian, Equifax, and TransUnion.
Yeah.
We're not developing a score model. We're just taking the middle score between the three accounts that are there.
That makes sense. And that's probably a big myth because I think a lot of people, hearing that you can qualify somebody between 580 and 600, I'm sure there's people out there that have heard, you have to have great credit to be able to buy a house, or you have to have all this money saved up to be able to buy a house, or have this crazy job history.
Right.
There's so many myths out there like that. And again, that's why you really need to be talking to somebody who is an expert, who does know all the real rules about that. And that's what we're going to get more into today. What else? Anything else that is an absolute, thing to do to prepare to buy a home for the first time?
Yeah. So in addition to credit score, part of the credit score requirements is what they call debt to income ratio, which I don't need to get too far into the weeds, but that basically means how much money do you spend versus how much money do you make? And that has to be within a percentage, including your new proposed mortgage payment. And so if you're thinking about buying a house, one of the best things that you can do is try to eliminate all revolving debt. Not necessarily close the accounts out, but just never carry a balance on a credit card if you can.
I think that's a really, really good point. So you just said closing accounts out, and that's something that's really important to remember in terms of your credit score. I've had people talk about, I paid this credit card off and I closed the account. Don't do that.
No.
Do not close your account because you might close the account that has the longest credit history, and credit history is a huge part of your credit score. Right? So don't close accounts, pay them to zero, don't close them. That's a huge, huge thing.
That's a really good point, Brian. And the thing, too, that factors into credit score, like he was just touching on, length of time of established credit, that's not something you can control. So if you have a 10-year Best Buy card account or something, you don't want to close that account because that's 10 years of credit history.
I literally did that exact same thing. I closed a Best Buy account that I had opened, I think it was like my freshman year in college, and I was so proud of myself that I paid it off and I closed it, and my credit score just tanked.
Yeah.
It was terrible. But you said another word there that I want to just take a second to clarify. You said revolving.
Yes.
And so what is it? Can you just explain that a little bit?
Totally. So a revolving credit versus like an installment loan or a student loan or a mortgage payment. Those are all different types of credit that are factoring in your credit score and your credit report. So revolving debt is like a credit card, a store credit card, a gas card, something to that effect. Okay. If you have, and in generally, as a rule of thumb, people say you want to use no more than 30% or less of what you have available to you on that card on any given time.
Okay.
So really simple numbers, if you had a $1,000 limit on a credit card, you would not want to spend any more than $300 a month on that card.
Right.
When that card comes due, you pay that $300 off in full. You're not paying any interest. It's showing the creditor that they gave you the opportunity to borrow $1,000 and you only borrowed 30% of that. And then instead of just paying the $25 minimum payment, you paid them their full balance due.
Yeah.
You're going to see your credit score jump exponentially if you can keep everything on revolving credit to a 0% utilization, but using no more than 30% on any month.
Nice. Yeah. No, that's super helpful. So then for my side, on the real estate side of things, for preparing to buy a home for the first time, what I would say is it's pretty simple, really. Just put a list together of your perfect home. Okay, sit down and just kind of visualize, like, what does the home look like? What does it feel like when you walk in? What does the neighborhood sound like? Just try to really get like the most descriptive, visual you can of that home, and then categorize those things, right? So if you're describing it and it's, a 1 acre beautiful, like modern farmhouse, and it has a big shop in the back and a tire swing in the front yard under a big old oak tree and all this sort of. It's like, okay, that's great. That's good visualization.
You gotta start with the dream.
Yeah, that's the dream. But if we can't find a place with a tire swing in the front yard under an oak tree, is that a deal breaker?
Right.
Right? Can I put one up for you?
Yeah.
I mean, would that be okay?
Right.
But just what are those things? And then categorize them into what are the absolute non-negotiables. Okay. Because you got to know what are those things. And if I'm helping you to, or another realtor is helping you to find a home, we need to know what are the absolute non-negotiables. You have to have it, right? Like you have 2 kids, you have to have a 3-bedroom if that's the case, right?
Right.
So another example is like maybe you say, hey, I want an acre of land, and that's what you visualize, and that'd be so nice. But all you really need is a place to park your trailer and a workshop to tinker on things. That's important to know because we could find something that maybe feels like it's really spacious and all that because of the setting, but it has the place to park your trailer, it has the nice shop, it has the tire swing even, it has all those things. So that's the first thing, is just create that list so that we know kind of exactly what it is that we're looking for in terms of the non-negotiables and kind of the would be nice to haves. Okay. And another piece there that's I think big is thinking about like, would you rather have a like turnkey house that is just ready to go where you don't have to lift a finger when you go in there? Or are you more open to a fixer-upper? Or maybe you need to paint the walls, or you need to paint the outside, or whatever. But somewhere where you can, do some landscaping and bring the value of it up. And that's been my favorite is places that they leave a little bit of meat on the bone for you, to where you can get some appreciation of the home by doing a little sweat equity. So
and making it your own.
Yeah, exactly. And you get to make it your own, and it feels fresh, and it's like part of that like joy of homeownership. You get to really
It's the best part.
Yeah, go in and make it your own place, right?
Yeah.
Put your own stamp on it. So that is number one, is make that list and really think through all that stuff. Number 2 is to just go do some drive-bys. Like go cruise around the neighborhoods, like drive around different parts of town, and just get a feel for those areas. And if you are looking in Southern Oregon, and you've lived here forever, then you probably know a lot of the areas. But there's parts of Southern Oregon that even I've lived here for 30 plus years. There's parts that I didn't even know existed.
Right.
There's little neighborhoods that I'm like, what the heck? Where did this come from? Like I had no idea this little pocket was even here. So just go explore places and check them out before you rule out an area. Like if you're like, oh, I'd never live in Eagle Point. Well, like, have you been out there? Like, because there's some really, really beautiful homes out in Eagle Point right now, or whatever, right? Whatever. You would never live in Rogue River. Like, cool. Go drive by it and drive through the town when they have all the flags out and tell me it's not like the most charming little town you've ever seen. Like it's great.
And on that point,
like that.
too, I was going to say, do it at different times of the day too.
Yeah, absolutely.
Because that can, if you're worried about, activity in certain ways, during the middle of the day versus 8 or 5:30, so you really get an accurate feel of what that's going to feel like.
No, great advice for sure. And then the third is just to save up a little bit extra. Because there's going to be things like furniture, you're going to need maybe you want like a perfect little like sectional couch to fit in this little space. And if you just use every last penny you have to buy for your down payment and buy your rate down or whatever the case is, you should just leave yourself a little bit of space there to be able to buy some furniture or to complete some projects or whatever the case is. So if you're thinking about how to prepare to buy a home for the first time, those are the 3 things I would say on the real estate side.
Yeah,
so
I like it.
Cool. Let's jump into the next topic, which is how to buy a home with 0 money down. Okay. And so I'm going to give you the real estate side of that, and your side of that on the lending is much more important on this topic because mine's pretty easy. All it really is on the real estate side is USDA loans, right? So Ryan is going to explain those in more detail, but USDA loans are for properties that are in USDA eligible areas, and we happen to live in an area where there's a lot of USDA eligible land. It's essentially anything outside of Medford, Central Point, and Grants Pass. There's some little pockets here and there that even within those cities that you can find a place that's USDA eligible, but that's really the whole premise of the program, is that it's more geared towards rural type of properties, and we're in a pretty rural area by many standards. But there's a great link that I'm going to put in the description of this video that you can check out, and you can just kind of cruise around on that map and see which areas are eligible. And it's actually kind of the inverse. Like, it shows you a map of the areas that are ineligible.
Right.
So everything else is eligible other than what they shade in orange, which is pretty much those cities that I mentioned. So that's the big thing there, is just taking a look at those areas that are eligible for a 0% down. And manufactured homes is something else to think about, because manufactured homes, if I'm right, correct me if I'm wrong on this, but they are okay with the USDA loan if they are brand new, never been lived in, just put on the lot, right?
So that is true. However, with Nations, the company I work for, we are on a pilot program with USDA right now that actually allows USDA to finance manufactured homes if they are 2006 or newer.
Wow.
So that's
breaking news right there.
Specific,
there you go.
Yeah.
No, that's awesome. That's good to know, because I've had agents reach out to me and correct me because my listing says that a manufactured home is eligible for USDA. And they're like, no, it's not. Well, you're here to hear.
With
Here
Nations,
it is. Yeah, so there you go. So that's the second thing, is just thinking about the home type, whether you're open to manufactured home or not. Depending on your price point, there's some beautiful manufactured homes out there, and those are eligible for USDA, especially under your guys' program.
Totally.
And the third thing is that just to know that there's other programs that have more flexibility in terms of location and type of home. And Ryan can tell you more about those. But if you were to find a home, you're driving through a part of town that's USDA eligible, and you drive past something that's like the perfect place and it's not in one of those eligible areas, there's still other programs out there where you can get maybe 0%, maybe really, really close to 0%.
Yep.
And you can kind of explain more about that.
Sure.
So, go ahead.
Yeah. So honestly, I mean, that's great, Brian. USDA is the typical program that you have out there for 100% financing. So there's no down payment requirement. The way that you kind of have to look at that, because there's other programs out there like VA, FHA, conventional, right?
Right.
VA is also 100% financing. So if you're a veteran and you're looking to qualify, obviously contact Brian or I, because that is 100% financing. And there's no mortgage insurance, which is a huge deal. And we could do a whole nother video on VA and why it makes sense to do that if you have that option.
Phenomenal program.
But USDA is a fantastic program to take advantage of. What you really have to think about with USDA is there are certain income limitations and property limitations, like Brian described. So if in theory for USDA, if you make over a certain amount, and that's predicated by your household income and the county that you're going in. So if you have those questions, obviously just reach out to me so we can figure out if you qualify for USDA. But if you're within a certain tolerance, they allow you to qualify. If you're over that tolerance, in theory, they say you should be able to save some money for a down payment and go a different program.
Right.
So that's something that talking to a lender first, like we've discussed, is going to be huge for you in making that happen. And switching gears in terms of programs that are available, FHA is a program that's out there that a lot of first-time home buyers used. I used when I bought my first house years ago.
Yep.
It's a 3.5% down payment, which is a relatively smaller down payment as opposed to conventional's minimum, which is 5%. They do a 3% option, just depends on the situation. But again, it's more forgiving, whereas FHA will allow you a lower credit score than maybe conventional will. So if you have a lower credit score and you're worried about the total payment, talking to a professional like myself is going to get you in a place where you can understand the apples and oranges of what you're really qualifying for. And again, with that, there's also property requirements. So when you're looking at it from an underwriter's perspective, we're trying to qualify you and fit you within the box, whether it's conventional, USDA, VA, FHA, down payment assistance program, whatever it is. You as a credit profile has to qualify, the property has to qualify for that. And I'm sure Brian can elaborate a little bit more on, what goes into the differences between property qualifications. They're all generally the same.
Yeah, no, they are. And there's certain things like, how Ryan said, with certain loan types are more forgiving in some ways than others. Well, certain loan types are also more forgiving than others in terms of the property.
Right.
And so, for example, like a conventional loan, they are generally more lenient on different things, like if you have peeling paint on the exterior of your home. An FHA loan generally is, unless the appraiser misses it, they're going to say like, hey, no, any peeling paint needs to be taken care of. It needs to be scraped. It needs to be repainted. And, to that level of detail. So they're looking really for homes that are in really, really good shape. And it's because they're financing generally like a much higher percentage on the loan to value. So, conventional tends to be a little more lenient in those things. So if you're looking at a place that's, maybe it needs a little bit of work. Maybe conventional is a better way to go.
And that's the option we want to explore.
Yeah, and the other thought, and it's something I've done personally, is there's a FHA rehab loan.
Yeah.
And that's something that if you find a place that really needs some work, you can finance in some repairs. And so if it needs a new roof or it needs new exterior paint, you can build that into your loan and go ahead and go buy that house. I bought one that needed the septic to be repaired. It needed exterior paint. It needed a number of things. And we just built it all in, new flooring, all sorts of stuff. Built it all into the loan, got it all done within the first 90 days or something of closing. And all those contractors were just paid directly from escrow. So it's an awesome program.
And to echo that, what Brian was saying was using specifically a 203K, or it's a FHA renovation loan. And so there's different, the conventional has a renovation loan, FHA has a renovation loan. Why would you want to go with one or the other? It depends on the scope of work that you're looking at, and then your overall credit profile and what you can qualify for.
Yeah.
But it's an amazing program out there for people that if they do find a property that's in somewhat of a distressed state, that they can get instant equity and then potentially refi a couple years down the road, because the inherent risk with taking on a 203K or a rehab loan is you're going to have a little bit higher of an interest rate than you would if you're just doing a standard FHA purchase.
Yeah.
But again, what's the give and take for that? Because if you get, X amount of money in equity through doing minimal amount of repairs, and then you refinance that property down the road, you're lowering your total monthly payment, bringing up your equity, and just giving yourself that much value that much sooner.
Yeah. So another question I wanted to ask you is that I hear from people that reach out to me that are first time home buyers all the time. What kind of first time home buyer programs are out there? And I think, in my opinion, I want to hear your take on this. I think there's a misconception out there that there's all these funds available for first time home buyers, because there were. Back in when I bought my first house, it was in whatever it was, 2010 or 12 or whatever. Anyways, there was a tax credit. It was an $8,000 tax credit that you got as a first-time home buyer. And so that created a lot of buzz, and I think people are curious, does that still exist? Are there programs like that? So what do you know?
So from a tax perspective, I know that's changed over the last 8 years or so. That's definitely changed. The down payment assistance programs, or the DPA programs as they call them in my world, those are always going to be an ebb and flow, and it depends on the market that we're in right now. And so, when rates were different in 2014, getting a down payment assistance program loan made sense because it's still penciled out, and it still very well could today. But we all know that the interest rates that we're living in today and the environment we're in is a little bit different of a market than we were then. And so, if we're looking at doing any kind of down payment assistance program, and there are different programs out there. We've got Oregon Bond Program. It's something that we can utilize. And there's different options with that, and we can discuss that if anybody has any questions on that. But it basically gives you a credit towards either your closing costs or a subsidy towards your down payment. If that happens, there are certain requirements that have to be met, and we can go through that again in more discussion. But right now, with where rates are at and the market that we're in, I'm seeing a lot of people utilize either FHA, USDA, or conventional 3% as their first time home buying program. Lenders advertise first home buying programs, and they are just really what we just described, but it's just how it's packaged to you as a consumer.
Just clever marketing.
Exactly.
Cool. Okay. So moral of the story is, if you are at all thinking about looking, you kind of kicking it around, and you're like, I don't have the funds to do it, don't worry about that. Get a hold of Ryan and talk through that, because there's scenarios where that may not matter. Okay. And totally. You're not going to know that until you have that conversation and you dig into some of the specifics. People are always, concerned about, are you going to run my credit or this, that? And I think it's, you can have a conversation at a high level without pulling your credit and this sort of stuff.
So every day.
Don't worry about that.
I'm not going to destroy your credit to look into it.
Exactly. So that's just another myth that's out there. But great. So don't forget, we're going to get to the big mistake that most homeowners, first-time home buyers make. So you don't want to miss that. But we have one more thing that I want to kick through here, kick around, which is the steps to homeownership. Okay. And so from a real estate side of things, the steps to homeownership We'll just kind of like walk through them, right? And the first thing is, like we kind of talked about just previously, is to really just do your research and find an agent who you feel comfortable with. Look at Google reviews. I think that's a really, really good place to start, because you'll see some honest reviews out there. And here's a thing, that if you only see 5-star reviews, only 5 stars, that should be like kind of a little bit of a red flag. Like somebody's not being fully transparent with you.
Right.
I have a couple bad reviews, and like they're there.
Yeah.
They're there for you to see.
Right.
And you can see my response to them. Like it happens, right? Nobody's perfect. And if they're portraying themselves as perfect, I would probably be calling BS on that
a little bit.
personally. But that's something to do. Just look at Google reviews, look at their Facebook page, check out their Facebook page, their social media, if they have a YouTube channel. Check all that stuff out, and like just make sure that the people know what they're talking about, and they're helpful. You don't want to go click on every button you see on like Zillow and Realtor.com and all this stuff to try to find an agent on there, because you're just going to get blown up,
flooded.
You're going to have so many agents thinking that you guys are going to be working together and they're going to be sending you houses, and it's going to be very overwhelming. So I would say do your own research, and then you reach out to the agent who you want to work with. And just make sure they know a lot about the market. Make sure they, are tall and they have a nice beard.
Ryan with Brian and Ryan, maybe.
But do the same thing with a lender too. That's the second thing is, you got to find those people who you can see yourself working with, and
that
you
you
think
trust.
Exactly. You're going to trust to guide you through that program. That's super, super important. So you want to do that, and then you really want to figure out your time frame. That's the next step. Is like you've talked to your realtor, you've talked to your lender. What is the time frame for you to make your purchase? And what's important there is like think about your work schedule. Like, do you have a really busy time of season? Are you in or busy time of year? Are you in retail, right? And like the holiday time frame is brutal for you, or maybe you're a wildland firefighter and like you can't do anything in the summer. Or you have kids and like you want to plan your move around their school schedule, like or their athletics or whatever it is. So that's going to obviously vary person to person. So you want to just think through that as like, what is the right time of year for you to make a move, so that everybody involved understands the amount of urgency that we all need to be acting with to help you find the right home to get you qualified for it.
Totally.
So once you've done those, then it becomes time to start searching for the home and to find the home, to find the one, right? The one that meets all those needs, or as many of them as we can. And that's the next step is identify the home, find it. And that's where we come in, or where I come in. You don't really do a whole lot of that.
Not yet.
But yeah, you find the house, and then we make an offer. Okay, we write it up and we discuss it. And we say, what are we qualified for? What can we offer here? What makes the most sense? Should we ask for a credit from the seller? Should we do however we want to structure that? We figure it out and figure out the best way for moving forward. And then we submit that offer, and then they accept it, hopefully. Or there's some countering that goes back and forth. But let's say they accept it. Then we open escrow. And escrow in the simplest form, because we're not going to get into the weeds here, escrow is basically just a third party who holds the contract and ensures that all the conditions of the contract are met.
A third party between the seller and the buyer.
Exactly.
Yep.
Yeah. So they say, hey, you have this contract. The buyer has fulfilled their terms. The seller has fulfilled their terms. We will facilitate the transfer of the deed from the seller to the buyer. Now you are the homeowner. Okay?
Neutral third party.
Very simplified way of explaining that. But that's how escrow, what escrow is. And so escrow starts, and then your inspections period starts.
And the escrow starts because you signed a contract that has a date.
Yeah, essentially. So that, and then you have to open it actually with the agents. We have to open the escrow with the escrow officer. So we send everything to them, and then you deposit your earnest money. And we'll not get into all the weeds on what earnest money is and all that in this video, but just know that you typically need to have, about 1%. So if you're buying a $300,000 house, it's generally about $3,000 that you would need to have saved to deposit your earnest money, which goes towards your down payment.
Right.
If you don't have that and you're talking about a 0% down situation, then
it's negotiable.
Yeah, we negotiate it and we figure it out. But anyways, we get escrow open. Then your inspection period starts. You do home inspections, all that kind of stuff. whatever you'd like to do there. And then the underwriting on Ryan's side, the underwriting approval is kind of happening at that point.
Yep.
And I'll let you explain that in a little more detail in a second.
Yep.
And then we close. Once underwriting approval's happened,
Yep.
we close the thing, we hand you the keys, you move in. But underwriting approval,
Yeah.
what the heck is that?
Yeah, so underwriting approval is happening in tandem with the property being approved, right? And the property is approved through having an inspection done, which you outlined, and that's an appraisal inspection. So there's two different inspections that are typically done on a transaction when you're financing. One is going to be your home inspection, and one is going to be an appraisal. There's a lot of a difference between the two of those. A home inspector is going to be more like a medical doctor coming in and giving you the life expectancy of your house and the roof life and the plumbing and all that stuff. An appraiser is going to go out there and just do minimum standards for you. So they're going to make sure this property has the minimum roof life, that there's no peeling paint if you're going FHA.
Right.
Whatever the situation, appraiser is not going to go through and give you that same type of an inspection a home inspector will, right? So that's something to keep in mind. The credit underwriting approval, which is what my job as loan officer is to help you get through the most, while Brian's helping with the property and everything once we're under contract. The underwriter goes and reviews the file. They review all the documentation that I collected up front from you to issue the pre-approval letter to Brian. They're going to review this documentation and say, based on what you provided, you need to provide us with X, Y, and Z to get to the finish line. And so I'm working with you as the client to get those credit items satisfied while the property is also in tandem being worked on for the appraisal. And so in theory, we get everything satisfied from whatever conditions an appraiser has, whatever conditions I have, whether it's an updated pay stub or an explanation for an address on a credit report or something that's a boilerplate condition that comes through. We get those things satisfied, we push it back to the underwriter. That underwriter fully approves the file. That's what releases the file to then go to closing to the escrow company where you sign and get everything wrapped up.
Perfect.
Yeah.
So there you go. Those are the steps to homeownership. So now the fun part.
Yeah.
What is the biggest mistake first-time homebuyers make on your side?
Lying to the lender.
No.
Yeah.
That happens?
Buyers are liars. They've said that that's a term. It's really unfortunate. You know, when I was new and I started this job, I thought everybody would tell me the truth. Again, thinking when I first started, why would anybody want to lie to me? I'm just here to help.
Right.
People don't realize that when you're buying a house, your lender is kind of like your lawyer. And you really have to just be full disclosure, tell them everything up front, anything that could happen, because we will always find out. Some way it'll happen, and it usually is in the 11th hour when we're like ready to go to closing, and then it's like, oh, you quit your job and you didn't tell me about it and thought it wouldn't matter, or whatever.
It's like the attorney-client privilege.
Yes.
You know, like, it's okay.
It's okay to tell me, yeah.
Just be honest.
And so if you can't be honest with me, then I can't be honest for you. And that's the biggest thing is like, I want to be able to stay ahead of any underwriter's curve.
Yeah.
And that kind of echoes back to that process we were talking about being pre-approved. For me, I like to fully vet my clients. So you have a plan A, a plan B, and a plan C. And you know what to expect, and you also know what the underwriter is going to ask for. Because that's huge. Because as soon as you go under contract, Brian, like you can attest, there's another level of stress that gets put on everybody.
Yeah, it becomes real.
Yeah, well, not every
oh my
day
God.
you're financing six figures. It doesn't happen every day.
Right.
And so you might find yourself in a position where, and if you're not stressed, then you don't care. So it's important and honest to know that you're stressed out about it. But personally, I'm a control freak. And so like, I would want to know, what am I going to wake up to tomorrow? And what should I be anticipating?
Totally.
And I think that if you're going to go through a 30 to 45 day escrow process, you don't want to be a stress case that whole time.
Right.
And that's where, like I said, being pre-approved, being honest with everybody up front, especially loan officer, and saying, hey, this is what I feel like is really up against me right now, or what is coming down the pipe. We can stay ahead of that curve for you, so then it doesn't impact you negatively when it matters most.
The truth will set you free.
That's right.
On your journey to homeownership.
Yes.
So on the real estate side, the biggest mistake first-time home buyers make is, there's actually two of them, and I had to put two. I know, we're kind of breaking the rules here, but the first one is just getting bad advice from people who have good intentions. Okay.
Sure.
And so like your Uncle Jimmy, who knows a guy whose neighbor flipped a house once, is not the person that you should be taking advice from when it comes to how to make an offer, how much to offer, how to structure a deal.
Right.
Like that's not who you should be listening to. No. Right. You need to trust the professionals that you choose to work with. That's why it's so important to do your due diligence in the beginning, to find the people that you can trust, and then trust them. All right. And I'm not saying don't listen to what other people say, but just consider the source. Okay. They have good intentions. Everybody wants to tell you, you shouldn't buy right now. Prices are going to go up. Like, okay.
Yeah.
I have a ton of videos about that. And one we just did a few weeks ago that we'll add a link to right here, that talk all about the scenarios of if you would have, if you thought, well, maybe I should wait, what does that look like? And it's a very ugly picture, right? Continuing to rent is a very, very ugly picture. And that's something like I've said in so many of the videos that we've done here, is if you're concerned about paying a little bit too much, in your interest rate or something like that. If you're worried, I don't want to pay 7.5%, I'm going to wait till they come down to 6.5%. Like 7.5% is a hell of a lot better than paying 100% in rent. Right. So just
totally.
Yeah, and that's what brings me to the second biggest mistake people make when they're buying their first home is you get hung up on the little things. Okay, getting hung up on something like I just said, like a difference in the interest rate that's really going to be insignificant in the long run. Okay, it's easy for people to get hung up on those things. Like you look at the inspection report and there's a leaking faucet, so you want $1,000 discount, and the seller's like, heck no, I'm not doing that. And then the transaction falls apart because of $1,000. But think about all the money and the wealth that you would have generated if you would have just stuck through it. So,
and I was just going to echo on that whole point about the difference in interest rate. People don't realize, I mean, it does make a difference over 30 years, but most people don't hold a mortgage for 30 years.
No.
If you're going to have a difference in 1/8% interest rate, it's $22 a month in payment.
Yeah.
$22 a month, even 1/4% is less than $50 a month. Do you want to walk away for something over $50 a month? Is there a way that makes sense for you?
Never. If you're paying rent and you're worried about $20 or $50 a month that you would then be essentially paying to yourself.
Right.
It just doesn't make sense. And that's one of the things I see people make that mistake a lot. Is they talk to Uncle Jimmy's neighbor and they're like, hey, no, you need to make them fix that sink, and you need to make sure that garbage disposal works right, and you need to make sure this.
Right.
They're not vested in the transaction, and so they don't care.
They're not professionals.
Right.
I mean, we live and breathe. I live and breathe mortgage. Brian lives and breathes real estate. Right. There's a reason we do this every day, and we feel like we want to impart this knowledge on you guys, and that's because we do feel like we are professionals, and we know that we've done because our track record proves it.
Yep. And so just don't get hung up on the piddly little things like that. Yeah. Like keep your focus on the big picture of home ownership and wealth generation. And remember that fact that we started this whole video with, which is that homeowners, the median homeowner is 40 times
it's huge.
Higher in their net worth than the median renter. 40 times. I mean, that is insane. That is I had to read that like 3 or 4 times because I thought it meant like 40% more.
Yeah, 40
and I was
times.
like, no, 40 times more wealthy.
It's exponential.
The average homeowner. It's insane.
Yeah.
So pretty crazy.
That's awesome.
Yeah. So I want to give a big thanks to Ryan Friend at Nations Lending. Thank you for doing this with me, man. I really do appreciate that. If people want to get in touch with you, what is the best way for folks to get a hold of you to talk about how to prepare to buy a home for the first time?
Yeah. Thank you, Brian. So you can reach me on my cell phone. Again, it's going to be area code 734-718-7013, or you can email me at ryan.friend@nationslending.com, and we'll make sure to have that in the link as well.
Yep. And again, I'm Brian Simmons with eXp Realty, and I would love to help you learn, buy, or list real estate here in Southern Oregon. So don't hesitate to reach out to me directly with call or text 541-954-7758. And of course, all my information is down in the description of this video. I also invite you to just browse around my YouTube channel and check out my playlist, Essential Resources for Homebuyers and Sellers. There's a ton of great information there, great resources in those videos. And when you're ready to start really learning about the different parts of Southern Oregon, check out my playlist called Living in Southern Oregon. There's tons of videos there about different towns like Ashland and Grants Pass, Jacksonville, Rogue River, and just all sorts of different towns across Southern Oregon. So I'd love it if you hit that like button, click the subscribe icon so that you don't miss out on any of the upcoming videos about Southern Oregon's real estate market. And thanks for watching, and can't wait to hear from you. Take care.
See you guys.